Oh, to be able to travel through time. Where is there a decent DeLorean time machine when you need one? Great Scott! Here we are again at the dawn of a new year, full of hope and anticipation. Ever wonder what it would be like to travel to the end of this new year and look back on things that happened over the course of the next coming 12 months? Well, we're refueled with some plutonium, so let's head back to the future and take a look at some of the trends that impacted the mortgage industry in 2018. Most mortgage economists and analysts with the Mortgage Bankers Association, Freddie Mac, and Kiplinger agree. Rates will be on the rise. According to an article published by Qualified Mortgage, the average rate for a 30-year fixed loan has for the most part remained below 4% through the early fall of last year. However, depending upon which economist you believe, rates are expected to hover somewhere between 4 and 5% in 2018. So what's behind the rate increase? Well, the anticipated rise in rates is in response to the growing economy, actions taken by the Federal Reserve, as well as other contributing factors. In fact, this past December, the Fed's raised its key interest rate for the third time in 2017 and foresees 2 or 3 additional hikes in 2018. That's a vote of confidence that the U.S. economy remains on solid footing 8 years after the end of the Great Recession. But the Fed wants to raise rates slowly in order to prevent inflation, and that can be tricky. Driving rates up too quickly or too high could shake up the financial market and steer the economy into a recession. And that's why no one wants that. When we look back on the year, just as my friend Marty McFly had the chance to do, we'll most likely view it as a purchase year. And with that comes the opportunity to educate borrowers, in particular millennials. Wouldn't you like to fast forward a few decades to see how that demographic is doing? By my calculations, and according to a study by Chase, from March to May of 2017, almost 4 in 10 millennials aged 21 to 36 review their credit score at least once a month. That's more than Gen Xers with 31% reviewing and 28% of boomers reviewing. What's driving, there's that word again, millennials to monitor their credit scores so closely? Well, according to that same study, a full 62% of the millennial respondents said they have a plan of action for improving their score. Maybe that's driven by the fact that a third of millennials reported they would buy a home within the next 4 to 5 years. That statistic underlines the importance of educating this demographic on how to become responsible stewards of credit by paying down outstanding debt and reporting any mistakes on their credit reports. They're going to be better positioned to qualify for a home in no time. Now, another trend that defined 2018, and I love this one given my scientific background, is automation. Wouldn't it be great if there was a computer that you could keep in your pocket that let people do incredible stuff like travel in time or sort of like progressing through a mortgage application process at incredible speeds? Great Scott! We had that! Yes, the digital mortgage was all the rage in 2018. And you can expect that automation and a focus on technology is going to continue. Artificial intelligence is here now too. Did you know there are actual machines that can plan, problem solve, move, manipulate objects? Some even have social skills. I hope this doesn't mean my DeLorean is being outdone. Anyway, to date, artificial intelligence can perfectly simulate human intelligence, and it can't simulate the diverse skills that are needed to assist someone with buying a home. What this means is you shouldn't discount the power of combining the human touch with technology. That's really the perfect blend in the mortgage industry. As I take one last look back to the future, I see one other trend that took hold in 2018. Vendor consolidation. Let's face it, vetting vendors is laborious. Why work with multiple vendors when you can work with a precious few or one? After all, time is money. Lenders can rely on a select few for all of their verifications under one roof. So now it's the time to return to the beginning of the year. That is, if I can get my hands on enough gigawatts and a bolt of lightning to propel me back to January 2018. I hope you've enjoyed this little trip back to the future. Now, as time unfolds, we'll see which trends are really going to impact our industry in 2018. Thanks for watching, and look for the next episode of America's Mortgage News.